What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see a bounce in the stock market across the board. Is this just a relief rally or are we going back into a bull trend? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today we did see SPY bouncing, going up 0.84%, and we never did hit that 50 EMA as support just yet. Now do note, we do see resistance at that 20 simple moving average, and we did see the price action closing right below that level. So we still need SPY getting back over that 20 simple moving average because we did lose the bull trend. So we need price action getting back over that 20 simple moving average to regain the bull trend. So right now it is still possible this is just a relief rally, or also known as just a dead cat bounce. Remember that a dead cat will likely bounce if you throw it hard enough at the floor. We saw a huge sell-off in SPY, so we definitely saw that dead cat being thrown at the floor, and now we're starting to see the dead cat bouncing. Remember, when you throw a dead cat at the floor, some of the force is absorbed by the floor, and the bounce will not go as high as the previous all-time high, and you're more than likely going to see a lower high situation and then continue to see the dead cat falling. So this price action is still very possible that we're just forming a lower high, and then we're going down for another leg lower. Well, no, that's not going to be the case if we do see price action breaking out of resistance and reattempting to break out from those all-time highs. So just like I was telling you last night, you need to remain objective and you need to let the price action do all the talking. There was absolutely nothing we learned from today's bounce that tells us that we can't go any lower, and there was nothing that we learned from today's bounce that tells us that we have to go lower from here. We could bounce and go to new all-time highs, or we could get rejected at resistance and continue to go lower. So the first thing you need to see on SPY, if you're a bull and you want to see SPY breaking out, is you need to see price action breaking back above 448 and getting a very decisive close back above this 20 simple moving average. We'll have resistance just above at 449, and we really need to see a price action breakout of about 450 to 451 to really validate that we're no longer in this downward trend. We're in a downtrend until we're not, and if I switch this over to a 1 hour chart, you can very easily see that we're in a lower high, lower low situation. There's no way you can look at a 1 hour chart of SPY and see anything other than a downtrend. We're starting to see a bounce and we're starting to see some confirmation that maybe we did see the bottom, but it's still way too soon to say that until we take out this downward trending resistance trend line, and you can see that we have to break above at least 449 before we see the downtrend ending. So don't get too far ahead of yourself, and even though this was a very bullish bounce, it's not necessarily meaning that we're out of the woods just yet, and we are still in a downtrend. So don't get fooled, let the price action do all the talking, and right now the price action is still telling us we could go much lower. Now jumping back over to the daily chart, don't forget that we still do have support down here at the 50 EMA, which is right around $442. It's possible we get rejected at the 20 simple moving average and then test the 50 EMA as support, and then we see the bounce and we continue to go higher from there. So there's a lot of scenarios that can play out, and I'm not going to pretend that I know exactly which one's going to play out. So just watch the price action and let the price action do all the talking. You still have strong support levels at 446, and the last time we bounced was off of 444. So watch those two support levels. Otherwise, look for the 50 EMA at 442 and the support level at 441. If we break and close below 441, it's very likely we're coming back down to that gap at 435. So look for that price action as well. If we start breaking out above 449 and 450, we'll be looking a lot more bullish and will very likely quickly regain the full bull trend, and we could see SPY breaking out to new all-time highs. So be patient, and if you don't know what to do, do nothing at all, because this is a very volatile market, and if you're not good at trading volatility, you're better off just not trading at all until the market has a more clear direction. Jumping over to the NASDAQ 100 QQQs, we were up 0.74% today, and we did see the NASDAQ 100 holding on to the full bull trend. We did have that critical test of support at the 20 simple moving average, and intraday we were below that level, but we did close well above all the moving averages, and we did hold on to the full bull trend. So are the QQQs telling us that this market is ready to start going higher and the dip is over? Only time will tell. For the time being, we still do have a downtrend, and I will switch this over to a 1 hour chart so you can see we do look like we are still in a downtrend on the 1 hour chart. Now to break this downtrend, we are making all the positive moves that we need to start making. And remember, we were looking for this possibility of a double bottom, but in order to see a double bottom, we need to get a breakout above the neckline, and that neckline is still sitting at here right around 378.5. So if you see price action breaking out above that level, that will confirm this was likely a double bottom, and we're going up to retest all-time highs at 382. So if you see that price action breakout, you could be a lot more bull biased in the QQQs. Otherwise, look for a rejection and come back down to the support level. Eventually, one of these price action breakouts will give you clear direction of the market, but there's no way you can look at this price action and know that we're going to break the neckline or know that we're going to get rejected and head lower. So you need to be objective and you need to let the price action at that level do all the talking, because either way, if you know what you're doing, you can make a long trade or a short trade and you could still be profitable. If you check your biases at the door, you can make money in either direction in this market. You just have to make sure that you don't have any biases that are stopping you from seeing what's really happening. So watch the price action at this critical resistance level, and that will be a very profitable trade no matter which direction the market decides to go. So jumping back over to the daily chart, watch those critical support levels at 375 and 374, and below that it's very likely we're coming down to close the gap at 368, which is also our 50 EMA, and that would make the most sense to retest that support level if we do lose the 20 simple moving average. To the upside, watch the resistance trend line at 380 and the previous all-time high at 382. And if we do break out above 382, look for that price target at 388. On the Dow Jones, we were up 0.68% today, and it still does look like the Dow Jones is just a dead cat bouncing. We have the 5th day in a row closing below the 50 EMA, and we are developing a lot of bearish trending. We need to see the Dow Jones getting a decisive break back above 350 and preferably back above about 352 to even consider the fact that the Dow Jones is going back into a bull market. For the time being, this is a very ugly look, and we see a lower high, lower low situation. And it does mean the Dow Jones could be going through a deeper correction. We see a bounce on lower volume, so there's no real strong conviction in the buying, and we could easily get rejected at resistance at 350 and continue this downtrend. So look for downside support at 348 and 346, and below 346, you're looking for support at 344.8 and 341.7. To the upside, watch resistance at 350, 351, and 352. On the Russell 2000, we were up 0.9% today, but again, the price action is getting rejected at that resistance level at 222, and the price action is below all the moving averages. If we get rejected at resistance, watch for support at 219 or the gap close at 216, and it will be very close to going into a full bear trend if we continue to go any lower. If we can start breaking and closing back above about 223 to 224, we could reverse the bearish trending and we could start to build up some bullish trending. So watch the price action break out above 224 for bullish or the breakdown below 219 for bearish, and then look for that gap close at 216. Right now, these markets could go either direction, so you need to follow the price action at these critical levels, and then you'll know which direction you need to make the trade. On the ARKK ETF, we were up 0.82% today, and we did bounce off of that support level at 115.5. The price action still below all the moving averages, and we need to break back above about 121 to even consider the fact that ARKK is going back into a bull market. So look for a breakout above 121 to let you know we're bullish, and then look for resistance at 123 and 125.6. To the downside, look for a break below support at 115.5 to tell you we could be going lower, and then you're looking for support at 113.8 and 112.68. Below 112, we could be coming all the way back to 109, so that will be a very critical level of support. On the VIX, we were down about 6.5% today, and we see the VIX closing right on top of our support level at 18.2, and we do see the VIX is still in a full bull trend. So this could be a pullback in the VIX before another spike in volatility, and you will know we're going into a deeper stock market correction if the VIX breaks out above 21 and closes above 23. Right now, we don't see the VIX doing that, so it's still possible we see the VIX getting crushed back down to support at 16, and then we do see the bull breakout and we do go to new all-time highs. So below 18.2 and heading towards 16 is bullish, and then a breakout above 21 is bearish, and a close above 23 is telling us full-blown stock market correction. So watch those critical levels because that will give you more price action to pay attention to let you know which direction this market is likely headed. On Bitcoin, we're currently up about 2.3%, and we do see Bitcoin back over our 20 simple moving average at 48,000. So again, this is a very bullish development. We saw the strong support at 45,000 holding up, and I did tell you as long as price action is staying above strong support, that's always a bullish indication. Well, now we have price action breaking back above all the moving averages, and we are starting to develop some bullish trending. So the next bull breakout we need to see on Bitcoin is a close above 53,000, and that could send us to brand new all-time highs with a strong resistance level right around 58,000. To the downside, look for a potential retest of support at 45,000 and 43,000, and a close below 37,000 will be a rollover look, and we could be coming back down to 30,000. I don't think Bitcoin is going to roll over at this time because the price action is looking bullish, and we are developing some bullish momentum. On Amazon, we were up 0.75% today, and we did break out just above that resistance trend line. We still have strong resistance at 3,500 and 3,552, and then we could close the gap at 3,580 and potentially continue to run to 3,700 or 3,760. To the downside, look for strong support right around 3,418, 3,400, and below that, we're looking for support at 3,311. Overall, I think this is just a pullback after we went way too far, way too fast. And I do think we should come up here and close this gap before we see any more downside. So I'm still bullish on Amazon, but that doesn't mean we can't see more pullbacks. So continue to watch these strong support levels below. On Tesla stock, we were up about 1.5% today, and we see Tesla closing back above all the moving averages, and we still do have that really strong bull trend. We need to break back above about 765 to get to our next price target at 800, and we still do have strong support at 732, 726, and 714.5. The 50 EMA is at 704, and our strong support trend line is right around 692. So there is a ton of support, and we're still in the full bull trend. So look for that potential breakout for the next price target run to $800. On Apple stock, we were up 0.61% today, and we see Apple getting a positive bounce off of the 50 EMA as support at 147, closing back above our resistance trend line just above 148.5. So Apple did lose the bull trend, and we need to see price action getting back above about 151 to start regaining the bullish trend. Remember, Apple hit the price target, and then we got a pullback and we lost the bull trend. So this could be Apple rolling over and getting ready to go through a full-blown correction. So if we do break out above 157, your next price target will be at 162, but don't assume that we have to break above 157. We have strong resistance around 151, and anything below 157 is just a lower high, and we could be continuing to see a downtrend. If we break below 147, look for support at 145, and below 145, look for the gap close at 137. On the financial sector, we were up about 1% today, and we do see a strong bounce off of the 50 EMA, but overall, we still have price action below the 20 simple moving average, and we still do have a gap below that might fill. If we fill the gap below, look for the double topping pattern, and we could be going much lower. On the industrials, we were up about 1.1% today, but we still see a very bearish looking industrial sector. We're forming a lower low and lower highs, and we're very close to having the full bear trend, so we really need to see the industrials getting back over the 50 EMA to prevent it from going into a bear market. The industrials were up 0.65% today, bouncing off of that 50 EMA, but we still see the Bollinger Bands expanding as we're developing some bearish trending. The healthcare sector needs to stay above the 50 EMA to prevent itself from going into a bear market. The energy sector was up 3.74% today, and we do see a bullish breakout back above the 50 EMA, and we do see the energy sector starting to build up some bullish price action with some bullish momentum. If the energy sector can stay above the 50 EMA, we could see a bull trend yet again, and we could start to see the energy sector showing some strength and starting to go into a bull market. So jump it back over to the S&P 500. Don't rule out the possibility that this is just a relief rally and this is just a dead cat bounce and we have more downside coming. Like I told you in the introduction, watch the price action and you know all of your critical levels, so you need to let the price action do all the talking. You no longer have the benefit of the bull trend in the daily chart, so you need to stay objective and you can't rule out the possibility the stock market is trying to roll over and die. Remember, any dead cat will bounce if you throw it hard enough at the floor, so don't rule out the possibility this is just a bounce before we have more downside. Stay objective in this market and don't rule out the possibility we're going into a full-blown correction. We have plenty of warning signs out there and we do see plenty of weakness in some of the sectors that do tell us we could just be a few days away from a major breakdown in the stock market. I'm not trying to scare you, I'm just trying to remind you that a stock market correction is a very real possibility. And a lot of you traders out there haven't really seen the pain of a full-blown market correction. And I'm here to tell you they are real and they do happen and they will happen when you least expect it. So don't get too complacent, stay objective and follow the price action and take this market day by day. If you're not sure what to do, you're much better off doing absolutely nothing at all and waiting until there's a more clear direction in this market. Nobody has a crystal ball and nobody knows exactly what's going to happen. So follow the price action and let the price action do all of the talking. Don't forget, I also do have my own trade alert service that only trades TQQQs called BANC Trade Alerts. It does very well in volatile markets, and this definitely looks like it could be a very volatile market. And I'm currently running a 50% off promotion code for your first month, so now could be the best time to try BANC Trade Alerts. You can find out all of the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.